Every day, millions of people throw money into the stock market hoping. But hope is not a strategy, and without knowing how to read trends, real trends, you're not investing, you're guessing. Remember that time your friend said, "Dude, just buy the dip," and the dip turned into a dive? Yeah, that's why you need this video. Let's stop the guessing game, because in the next few minutes, you're going to understand how professionals see trends before they happen. And once you do, the game changes. The stock market is a $46 trillion machine powered by fear and greed. And yet, most people treat it like a slot machine. Why? Because no one taught them to recognize real patterns. Not in school, not even on Wall Street TikTok. And that's dangerous. Because here's the truth. If you don't understand what phase the market is in, you'll buy high, sell low, and repeat the cycle until you're broke or disillusioned. So what are these phases anyway? Is it some kind of stock market Hogwarts? Nope, but it is kind of magical when you get it. Every market moves in cycles, just like seasons, 4 main phases. Let's break them down. First, accumulation phase. Oh, happens after a crash. Smart money quietly starts buying. Oh, no hype, just value. Oh, think. 2009, everyone was scared. Pros were buying, second markup. Phase O, prices start to rise. Trend is established. Oh, retail investors finally notice. Oh, excitement builds. Oh, pattern interrupt. Insert your uncle's "now's the time to buy Apple" moment here. Third distribution phase. Oh, prices flatten. Pros start selling. Oh, news is still positive, but something feels off. Oh, warning sign. Volume is high. Prices don't move much. That's a red flag, not a green one. 4. Decline. Phase. Oh, the bubble pops. Panic selling begins. Oh, news goes from "to the moon" to "it's over." Oh, smart money already exited. This cycle repeats over and over and over. If you understand this, you're not playing checkers anymore. You're playing chess. Now, how do pros spot these trends early? They use indicators, but not the kind that blow up your phone with emoji alerts. 1. Moving averages, 50-day and 200-day. When the 50 crosses above the 200, that's called a golden cross. 2. Volume spikes. A huge candle with volume, that's power. No volume, it's noise. 3. MACD. Tells you when momentum is flipping before your emotions do. 4th, RSI, Relative Strength Index. Tells you if a stock is overbought or oversold. Simple, but powerful. These aren't magic, they're tools. But like a sword, it's how you use them that counts. Let's take a real example. Tesla in 2019. Everyone doubted it. But if you looked at the chart, accumulation phase, rising volume, golden cross forming. If you'd spotted it, you'd have caught the entire markup phase before the hype. Professional investors saw what others ignored. They weren't late, they were prepared. You don't need to be a genius. You don't need 8 screens or a hedge fund license. You need knowledge and discipline. Because when you understand how to read the market's heartbeat, you don't chase hype. You lead the trend. The wealthy don't predict, they prepare. They follow trends before they go mainstream. That's what you can do starting now. But what if you could spot which stocks could go 10x by 2030? If you found this eye-opening, you'll love our next deep dive. Will Coinbase stock reach $1,000 by 2030? We break down macro trends, crypto adoption curves, and whether Coinbase could be the Amazon of crypto. Click the link, master the trend. And remember, pros don't chase, they position.